Hello everyone, my name is Peter Kim. I'm one of the partners from KKL CPA Inc. Our office is currently located in Surrey, British Columbia, and we've created this YouTube channel called the Tax Cafe. The purpose of Tax Cafe is to provide useful inside knowledge or tips related to accounting or tax compliance. For today's topic, we've decided to cover GST, HST, and PST for e-commerce in Canada. We understand that there are a growing number of e-commerce business owners in Canada, and since it hasn't been around for many years, it's only been a few years since the government has set the tax compliance laws on e-commerce businesses in Canada. So I'm sure there are a lot of you guys out there that are confused and that are not sure what to do with taxes and not sure about the tax obligations. Even if you wanted to do it properly, it's really confusing, complicated, that you're not sure if you're doing these things right? So today I'd like to, through this presentation, I'd like to kind of produce content that can stay with you for your future endeavor as e-commerce business owners, basically. Today's agenda is going to be about basically introduce GST, HST, PST, and then we're going to talk about the introduction to the platform economy and the GST, HST on digital economy businesses set by Canada Revenue Agencies. And lastly, we're going to talk about the newly implemented PST marketplace facilitator taxes. It's been around only for a few years, so there are people that are not familiar, especially people in BC. And we're going to wrap up after that. So as most of the people are aware, these are types of value-added taxes that we have in Canada. It's GST, HST are governed by federal government, and PST is the provincial sales taxes and governed by each different provinces noted below. This chart shows different tax rates, right? It could be GST, could be HST, which is the harmonized sales taxes, right? For HSTs, there is no PST, right? But if there is only GST, there could be additional provincial sales taxes. So there could be either HST alone or it could be GST alone. It could be GST and PST. It depends on where are you located, right? I guess this GST and HST charts comes handy, especially if you are selling digital products or a fulfillment center somewhere in Canada and shipping goods to different locations in Canada, right? So depends on where the services or where the products are being provided, these different tax rates can be applied. So the general rules before we dive into any further, I'd like to talk about the general threshold laws about the GST, HST. So basically, CRA states that you have a duty to register a GST and HST account. Depends on if your threshold amount of applicable revenue exceeds $30,000 in Canadian over any 12-month period beginning on after that date. So if you basically, it's saying if you have made more than $30,000 in revenues, not net income or anything. So basically, if you sold more than $30,000 in 4 consecutive quarters or 12 months period, that means you're no longer a small supplier. That means you have to start registering for GST account and have to charging GST to the clients and collecting it, and as well as remitting to the government. So on November 30th, 2020, the Canadian federal government has proposed amendments to the GST HST regime to address the loopholes in existing tax obligations, basically, that have not been updated to reflect the digitization of the global economy. The new announcement is basically very inclusive in a sense that it covers the obligations of both the digital platform operator, which is the marketplace facilitator. Could be on Amazon, could be Airbnb, could be any of those platform operators, right? as well as the vendor that's selling service through this platform operators. So regardless whether you are a Canadian resident or a non-resident, as long as you're providing services within Canada, it could apply to you. So the way this law came into effect is because it's before 2014, the existing GST, HST excise tax wasn't very broad enough to cover the tax obligations for non-resident vendors who didn't have a sufficient presence in Canada. Well, back then, like years ago, basically the main determining factor as to whether or not you should collect GST, HST is by looking at whether you had a physical location in Canada, basically, right? So this meant that for some of the vendors that were free from charging or collecting GST, if you didn't have the sufficient presence or physical locations in Canada, but still providing goods and services in Canada, right? So then what happened? These people were not paying any taxes because they weren't collecting any taxes. They had no obligations, obviously not charging GST, HST to their final consumers in Canada. So that means the government wasn't collecting enough taxes when it wasn't collecting enough GST and HST. So there was like a leakage of taxes basically for the people that are providing the same goods and services, but only because they were doing it through online. And also for domestic business competitive standpoint, people that had physical locations in Canada were not only incurring expenses because of their overhead costs such as like rents and physical location, right? But they were collecting in GST and HST or PST to their customers, and they just simply couldn't compete against the people that were making sales through online to Canada. So government basically at the end of the day had to take an action, right? So under the GST, HST current rules, non-resident persons that carry on business in Canada are generally required to register for and collect GST, HST on their taxable supplies of goods and services in Canada. Like I said, non-resident persons that do not carry business in Canada are not required to register or collect GSTs. So this specific slide, it talks about the different platform economies set by CRA. It could be a sharing economy, it could be ride sharing, it could be accommodation sharing, it could be a gig economy. Basically, if you're a freelancers, like list yourself out on the website such as Fiverr or Uber Eats or Skip the Dishes, right? So it's basically providing temporary work based on online platform or mobile app, basically. And the income threshold still remains of $30,000, but then the requirement to collect depends on the type of work being provided and the location of the person or business you're providing service to. For ride sharing, it's a little bit different. Actually, this is one of the only different types of economy that is different from any other digital platform economy, is that if you are a Lyft or Uber driver, the threshold on income that we discussed earlier of that $30,000 in sales in a year doesn't apply. So that means if you're a ride-sharing vendor using these platform economies, that means you just have to register for GST or HST regardless of your sales amounts. Yeah, so this is one of the very different exceptions compared to other ones. And there's a peer-to-peer, which is involved in selling of goods from one person to party to another through Kijiji, Etsy, eBay, Amazon, right? So then $30,000 a threshold still remains. And then there is social media influencers, created a significant influence on social media platform and earns income through the subscription to their content, advertisements, collaboration with other influencers, receiving tips, gifts, donations from their followers or audiences, right? And $30,000 on the threshold revenue still remains. Yeah, so this sharing economy is basically like CRA has categorized the platform economy for big umbrellas to basically to be as inclusive as possible in setting the parameters of the tax obligations. Essentially, whoever is basically involved in making sales to consumers in Canada, they just want to make sure that the service providers become liable, right, for the collection and remittances of GST and HST. Except for a few situations where the shipments are coming from the fulfillment centers located outside of Canada and being delivered to Canada, it could not be applicable, right? So, this slide now talks about the GST, HST for digital economy businesses. Now it's subcategorized into 3 different fields. One of them is cross-border digital products and services. This is specifically for non-resident vendors selling taxable digital products or services in Canada. It could be ebooks, it could be online video gaming, Shopify, or selling your music, right? And the next one is for the supply of goods and services. It could either be resident or non-resident vendors who sell taxable goods that are delivered or made available to the purchaser in Canada, including goods that are located in Canada, such as a fulfillment warehouse or shipments from a place in Canada to a purchaser in Canada. Basically, so if you're an Amazon seller that have fulfillment center located in Canada and that shipments coming from these fulfillment centers in Canada to the purchasers in Canada. And then there is obviously the platform-based short-term accommodation. So basically, big example, it could be an AIRBNB, right? Suppliers of supplies of short-term accommodation in Canada, or accommodation platform operators such as AIRBNB that facilitates such supplies through their accommodation platform. So basically, to explain this concept as easy as I can, this slide is basically stating that the non-resident vendors that are not registered for GST and HST before with the previous rules now would have to be registered under the GST HST simplified regime if the total taxable supplies of those digital products and services made to consumers in Canada exceed $30,000 over 12 months period. Now, please note that in calculation of this $30,000 threshold would not include any sales that were made through a distribution platform operator, so basically like Spotify or these platforms, these companies that is registered for GST, HST under either the regular or simplified regime. So if you are a vendor, just listed your music through this marketplace facilitator platform or websites, and these will not be counted towards $30,000 of threshold. However, these distribution platform operators, basically these platform companies, if they make sales by third-party vendors to consumers in Canada through their distribution platform, will generally be required to register for GST, HST under their simplified regime. So basically, these platforms that facilitate the third-party sales to the consumers will now have to be registered for GST. So basically, Spotify would now have to be registered for GST, HST account, basically. Now, non-resident vendors that only sell through GST, HST registered distribution platform operator should not be required to register for GST, HST, as sales made through these operators are excluded from the calculation of $30,000 threshold. So that is the same concept that I just explained. So basically, if you only list your services or products through those distribution platform operators, and you don't directly make any sales to the Canadian consumers, then you're not required to register for GST, HST, and those sales will be excluded from the calculation of that $30,000 threshold. So So basically, it is the B2C sales and B2B sales. So Canadian government basically wants to apply GSTs between for the sales that were made between businesses to consumers. But let's say if you're a third-party vendor that's using these platform websites, and if you put your GST and HST numbers, then you're not really considered as making sales through B2C. It is actually B2B, so it'll be excluded from the calculations of $30,000 threshold. So again, here I'm just gonna repeat myself, basically saying for these purposes, an entity or a person that is registered for GST and HST provided its GST HST registration number to the registrant will be considered a business, and any other entity or person will be considered a consumer. So that is the important concept. As now, to talk about the short-term accommodation platform businesses, I know that this will be kind of like a popular topic, especially people in Vancouver. It's a tourist popular area here in BC, right? So I know a lot of people that actually have been operating Airbnb businesses in Vancouver or anywhere in BC, and people are quite confused about their GST, HST obligations. So to dive right in, again, this is a very complicated concept here. So he just talks about who charges and collects GST, HST, and talks about the simplified GST, HST regime. So the new GST, HST rules came into effect as of July 1st, 2021. It says GST, HST will be collected either by an owner that makes more than $30,000 in taxable supplies, which is like providing the short-term accommodations, facilitated by accommodation platform operators. So basically, if you are an owner of a property that has listed his property on Airbnb websites and made the revenues more than $30,000, then you are obligated basically to register for GST and HST and collect directly. Or if you are a Airbnb itself, or it could be anyone who's actually running the platform operator business similar to Airbnb, that if the owner of the property is not registered for GST and HST, in this case, you as a platform operator will now deem to be the supplier of the short-term accommodation. So basically, the Airbnb will collect GST, HST when the property owner is not registered for GST and HST. So long story short, so if your sales made through the short-term accommodation facilitated by the Airbnb or similar websites exceed $30,000, you as an owner is now really obligated to register for GST and HST and remit that to CRA. But if you're not registered, if your sales do not exceed $30,000, it is Airbnb that will have to be in charge of collecting GST and HST on behalf of you from the clients and will remit directly to CRA. So basically that's what these slides are basically indicating. I know for some reason, if I really try to look into in detail, it's actually more confusing. So the next slides will discuss about the sale of goods located in Canada, sold by the distribution platform operator, acronym DPO. So basically, this slide is stating that the new rules now indicates that the GST will now have to be registered by the DPOs. So basically, let's say on Amazon, if the goods that are located in fulfillment centers located within Canada are sold by someone, basically as a third-party vendor, who is not registered GST, HST to Canadian consumers. So basically, if you are a vendor listed in Amazon, if you're a seller, Amazon seller, and if your sales are for the products coming from the fulfillment centers located in Canada and provided to the final consumers located in Canada, and if your sales do not exceed $30,000 and hence you're not registered for GST and HST, then it becomes Amazon's responsibility to be registered for GST and HST and remit that on your behalf, basically. What's important is that if you are an Amazon seller that has GST, HST account, you are a registrant. In that case, the DPO, so basically Amazon will not be deemed to be the supplier in respect of the sales facilitated by the GST, HST registered third-party vendor. So it doesn't matter whether you as a Amazon seller is resident or non-resident, as long as you have that GST, HST number registered in Canada, and the Amazon will not collect GST and HST for you. So it becomes your responsibility to charge the GST and HST to the clients and remit it to the government. So in that case, the third-party vendor will remain liable for collecting and remitting GST, HST on sales made through the platform. So I guess if you become a seller, then Amazon and DPOs will have to request and make sure that whether you are a GST or HST registrant or not, right? Because it depends whether you are or not. It totally changes their responsibility in terms of collecting GST and HST. So if you're a seller, then if you're registered, then you would have to provide that GST number and then enter it in the central dashboard, and then it becomes you that's actually collecting the GST, right, instead of the Amazon. So please note that this is probably, if anything, this is probably the single most important piece of information that I can share with you guys today. So yeah. GST, HST requirements. This slide says that marketplace facilitators collect and remit GST, HST when both conditions are met. Seller has not registered for GST and HST. Sales take place where both departure and arrival addresses are within Canada. So basically, if you're trying to sell something, and that product is actually coming from the fulfillment centers located outside of Canada to the consumers in Canada, then there's no GST or HST applied on this sale. So it is important to make sure that both departure and arrival addresses are located in Canada. Again, this talks about the $30,000 revenue threshold. So this slide kind of talks about then why would, as a vendor, let's say for a registered GST and HST account, right? If vendors' revenue do not exceed in $30,000 in 12 months period, then no obligation to register for GST and HST. Well, it's because of the input tax credit, right? Input tax credit is basically the amount of the GST you as a seller has incurred, right? Through the expenses you've made related to your businesses. So basically, if you bought something to provide to your customers, and you must have incurred GST on those certain expenses, you can actually claim those amounts back and then offset the payable amounts, and then you'll actually have to remit the remainder. So let's say if I charged $5 out of GST for $100 sales, then you would normally collect $5 from the clients and then remit it to CRA. But let's say if you've bought something, let's say a chair, to provide, just related to your business, basically to provide any services that you're doing, and then you've incurred $2 of GST or whatnot, and then what it means is that you can only you don't have to pay the entire $5 to the government. Now you've incurred $2 of GST from the expenses you've made related to your business, that means you only have to pay the remaining difference of $3 to the government. So it can be quite beneficial for you, especially if you have a lot of expenses. If you're newly starting your e-commerce and spending a lot of monies on like equipment, supplies, that means you're paying GST, HST, right, on the supplies. So you can claim these GSTs back, and then you would only have to pay the remaining difference between what you collected and what you basically paid on GST. So that's the reason, right? So, and then I know that a lot of you guys are actually bringing products from like foreign countries, and the custom board, custom services in Canada, like upon arrival, they'll charge you like GST on import fees or those things, right? So GSTs paid on importation can also be used as an input tax credit to offset the total GST payable at the end of the day. So it's really important, like such as professional fees, if you're paying rents, there is GST on it, right? So it's for these reasons, even if you're not, your sales do not exceed $30,000, it might be a better idea to actually register for GST, HST account. It also talks about enhancing your company's cash flow. You have control over when to remit. So basically, if you charge GST, rather than relying on a marketplace facilitator to collect the GST for you, if you collect, you have higher cash flow as you're actually withholding that GST until the deadlines of the payments, right? So, and especially if you are an Airbnb owner, and if you recently bought a property and paid GST for the property that's exclusively going to be used for short-term accommodation purposes, then you can claim that big chunk of GST as an input tax credit. So that is probably the single biggest input tax credit you can ever claim, I would assume, right? Now, there is now this new PST marketplace facilitator legislation that has came into effect as of July 1st, 2023. The government has made an amendment. Now, by the way, guys, this is only specifically for BC government. I know that each different provinces that have PST have probably came up with different legislation that are probably somewhat similar to each other, right? So if you understand this slide, probably the similar concepts of PST obligation will probably apply to the different provinces, right? So basically what this is saying, if the service is provided to goods that are in BC at the time, the service is provided, and then the services in respect of storage of goods, basically like the fulfillment center, or the goods that are stored in BC, the services in respect of an accommodation located in BC, or it could be none of these, but however, the online marketplace seller is in BC. As of July 1st, 2023, the online marketplace facilitators are not required to collect PST on goods located outside of Canada at the time of the sale, regardless whether the goods intended for personal or commercial. So for the goods that are located outside of Canada, then obviously this marketplace facilitator legislation doesn't apply. So basically what this is saying, what this marketplace facilitator legislation would do to you is that they made it mandatory, the BC government made it mandatory to apply, made the facilitators to collect and remit PST from the sales made by the merchants, right? So even if you don't collect PST, even if you're not a PST registrant, now this legislation made these marketplace facilitator websites basically to collect and remit PST on behalf of you, right? So yeah. What does this mean for an online marketplace seller? The online marketplace seller is not required to register and collect PST or MRDT. So MRDT is the specific municipal taxes for the short-term accommodation businesses. So let's say for Airbnb, you're not required to register for collect GST or the PST or MRDT. It becomes the marketplace facilitator that becomes liable and make sure that the PSTs and MRDT are collected from the final consumers, right? However, a seller remains jointly and severally liable for any PST or MRDT not collected and remitted by the online marketplace facilitator in relation to the online marketplace facilitator in relation to the online marketplace seller sales. So basically, they don't want to just like, set you free of the obligation to collect PST. All it's saying is that, although you may not directly have to collect PST from the clients, and will make the Airbnb websites basically to collect PST or MRDT, you're still not very free from your obligation if somehow Airbnb fails to collect this PST amounts. Then you as a seller, as well as the facilitator operator, which is an Airbnb, are jointly liable for any amounts that are not collected properly. So something to keep that in mind, right? The content summarized on this page is basically can be quite complicated. I know it's very confusing because it's very complicated and just overwhelming. Like if you were to go check out the Canada Revenue Agency website and try to read the details, it's actually really long. It can be quite overwhelming. It sets out the various GST, HST obligations. There are so many different factors that affects this, right? Depends on your residency status or whether you're a marketplace facilitator or a vendor selling goods, services through them, the location of the services being rendered, so on and on, right? So essentially, the place of supplier rules indicates that digital goods and qualifying goods sold in Canada are subject to GST, HST obligations, basically. So in summary, staying on top of tax compliance in an e-commerce business can be quite tricky, as you guys have seen in the previous slides, and the explanation was very tricky and complicated, but it has become the necessity that cannot be overlooked by the business owners, because the more you know of the tax obligations, the further ahead you will be in the game of today's growing digital platform economy. So the digital economy hasn't been around that for decades. It's been around for probably less than 10 years, and there has been growing demands by especially the business owners involved in e-commerce about the clarity in their tax obligations, and hopefully this video somewhat gave you guys general understanding of the liabilities that you might face while staying competitive in today's growing digital platform economy. But again, it's really important that you assess your own each different scenarios as a business owner. If you're not sure, there's a whole lot of links that you could look into online, especially CRA websites you give you in details, but sometimes I have to admit that it can be really challenging to understand. You're reading pages and pages of CRA websites and you're still not clear of your own tax situation. So in that case, please reach out to us, right? So we're here to help you. We'll sit down together and look into your situations and see what types of each different scenarios that we discussed today will apply to you solely. So so don't hesitate to give us a call if you're confused. Please give us a call. Making sure that you're staying on top of the tax issues will get you far in the game of digital economy. Well, thank you very much for watching the videos, and if you liked our videos, please subscribe and like our channel, our videos. Lastly, I'd like to introduce our team members. I'm in the middle, Peter, and there is other two partners that I work with, Bill and Sun. So yeah, we're 3 CPAs working together. Let us know if there's anything we can help you in accounting at any time and any day. Thank you. Bye.